The Federal Reserve claims we can't have inflation because there's high unemployment and excess capacity in the system because of the recession. They claim this. Mainstream economists from all the big investment houses echo this. So, you know, if you have a math background, which I do, or computer science, or any type of science, when you have like some assertion, if you can come up with a counterexample, it's wrong. All you need is one counterexample. Apparently, this is not done in economics. So the first counterexample you can look at is the US. The United States itself in 1974, when all these people were alive, and then Bernanke himself was in college at that time, a graduate student. And there was a deep, deep recession, which was the worst since World War II at that time, and the inflation rate went to 12% and doubled from the year before. And it was the highest in maybe the century at that point. So there was a case where there's lots of unemployment, lots of excess capacity in the system, in the United States itself, and a huge inflation exists. Then the Fed will like stand there with a straight face and say, well, this can't happen. When they actually lived through this themselves and saw it. Now, either they are lying or they have had a lobotomy, secret lobotomies, and they are just, you know, being run by robot controllers. I mean, this is outrageous that this can be printed in the Wall Street Journal, Barron's, and other major publications. It is moronic. Yeah, okay, and there's dozens of other examples, but you know, one in the United States is the best one in recent history. Weimar Germany, the hyperinflation took place in the US in 1923. Unemployment rose to 23 to 24% at that time. Factories closed down, the whole economy collapsed, the prices went to infinity. This does not prevent inflation if the government is printing too much money, which we are. Zimbabwe just happened. This was the first hyperinflation of the 2000s. Unemployment in Zimbabwe reached 94%. 94%, 9%, 9.5% in the United States. As it went to 94%, the entire economy totally, completely collapsed. There was sextillion inflation, which is one with lots and lots of circles. So there's a case of total collapse again, we can have inflation. Okay, the other thing is happening, and the big danger in the United States is if we lose our reserve currency status, it keeps the value of the dollar way above where it would be without it. And so what's happened, the BRIC countries, that's Brazil, Russia, and we have China, and China's the big lead, Russia's helping them a lot. They're trying to replace the dollar as a reserve currency, and they're eventually going to succeed. This keeps coming up every 2 weeks, 3 weeks in the press. It's coming up again and again. They're not just going to go away and say, okay, we'll just keep all our money and watch it go up. So there's big pressure. Here's the pressure point. Here's where this is coming from. So, and there's probably, they want, there'll probably be some transitional system where the basket of currencies is used with the dollar as part of it. So it'll be sort of like a reserve currency. But this is like, you know, this is a risk. There's all these risks in the system. All the evidence is there. What happens when there's lots of inflation? First, the government denies it exists. That's what we're doing right now. Even the worst case I found was Weimar Germany. Keep in mind the inflation rate was in the trillions of percent, 100 trillion % in the end. The government actually, not just the government, the top economists, you know, the entire power structure, all published articles and gave talks about how there was no inflation. And they proved there was no inflation, even as inflation was going into the trillion % high. And it's all documented, and this is like 22 years before it really like exploded completely. You know, there's a huge record that the equivalent of the Federal Reserve, the equivalent of the Treasury, the top economic professors from the top schools, proved in various ways, shapes, and forms there was no inflation. The governments that have to have an index, like Brazil and China, were actually caught lying about the statistics red-handed, not just like jiggling them like we do, but just making them up. So, you know, and it's hard to do that, but there have been cases where governments have been caught. And at the very least, the numbers are fudged in every case. as indeed the United States is doing. We've adjusted CPI in the 80s and 90s. In each case, the adjustments caused the inflation rate to become lower, and never did they cause it to become higher. So it was a one-way trip. And that's lying about inflation. We just said, okay, we can't control that much, we'll just lie about it. So there's actually been a lot more inflation than we've been told about for the last 20 years. Okay, when inflation breaks out, like in Germany, and everyone knows it, finally they can't lie about it anymore. Without exception, speculators, outside forces are blamed. Other people too, but it's always speculators and outside forces. Now, just in the last couple of weeks, the CFTC, which regulates commodity trading in the United States, recently blamed speculators for all the rise in oil prices, natural gas, etc., commodities. You always get wage price controls. The CFTC is an attempt to have price controls of oil. We had price controls of oil in the early 70s. That was before there were long, huge gas lines and big shortages. We blamed the Arabs. We did not blame our policy, which created that problem. And this is just, somehow we will blame someone else other than speculators this time. Maybe OPEC will show up again. So, but these existed in the 70s. Because Nixon put on these price controls, the production of oil dropped significantly in the United States. We were self-sufficient in 1969, before the price controls appeared in 1971. There was a huge drop in production because people could not make enough money. Price controls always create shortages without exception. They never solve the problem, and when they are removed, you generally get an explosive price move up, where all the price increase takes place in a very short period of time, and usually much more than would have taken place. But anyway, indexation, as I said, when inflation becomes really obvious, indexation gets put on, and this actually just simply keeps the inflation, entrenches the inflation, doesn't make it go away. It ensures it stays there and keeps going, because people say, well, inflation's dead, but it's been up 20% this month, but my payment or something went up 20%.